Well, what do you know? People still use Adobe and all of its products. Why? Pretty simple. Great system, great ecosystem, you're used to it, so why not? Of course, with the rise of AI, OpenAI Sora, and other applications, there was a lot of noise. People thought, now with the rise of AI, generative AI, who's going to use Adobe, right? Who's going to use Adobe if you can do other stuff by just writing what you want? Plus, more recently, we had the controversy with the terms and conditions that a lot of us have signed without even reading, so that's on us. But I do agree that the wording there wasn't the best, let's say that. Hopefully this gets fully addressed pretty soon. But overall, Adobe is still a solid compounder with great products. If that was not the case, they would not have been the number one for years and years. There are plenty of other products out there that have existed for a long time, right? I'm using DaVinci Resolve. So why hasn't that hurt Adobe? Why hasn't Photopea or Affinity or all the other programs out there, why hasn't that destroyed Adobe? Well, because first of all, Adobe has plenty of products. The whole Adobe ecosystem, you can call it an ecosystem because it's truly a big ecosystem that works very well together. Lots of data, lots of innovations, lots of developers. So why choose something else? If it works, if it's good, if it's maybe not the number one in one specific area, but in all the rest, why would you switch? Why would you switch all your workflow into something else? You wouldn't. Anyways, Adobe right now is up, I think, 15% or so. We're over the 200-day moving average at $525. So the stock has respected that higher lows line quite perfectly this time. Of course, let's wait and see if we can stay above that 200-day moving average. Probably some things will be mentioned during the earnings call, especially with regards to maybe the use of AI credits, because I couldn't find any information on that in the press release. So let's wait and see with that. I will touch on it more on the Sunday video. Then with regards to Adobe stock this year, well, before the reported earnings was down 23%, now it's down around 10% year to date. But overall, if you look at valuation compared to its 5-year mean, it was already quite low-ish, all things considered, right? Of course, again, we have that period of the pandemic where valuation was elevated across the board. But again, if you look at price earnings to growth, extremely low for Adobe. I've been talking about Adobe more and more recently because, again, I did not understand all the noise in the market with regards to this great company, this great business model. And I think the market has agreed yet again that, okay, we overreacted. By the way, for this quarter, a beat across the board. Guidance, annual revenue guidance met expectations. Annual APS guidance was slightly ahead of expectations, but Q2 revenue guidance missed by 0.8%. But overall, there was so much pessimism around that stock and around that company that the results were good enough to see the stock go up 14.4%. Currently looking at what the analysts are expecting for the coming fiscal years, sales growth of around 10 to 11% year over year for the next coming fiscal years, and EPS growth of around 12 to 15% fiscal year 24, 25, 26. This quarter, they've also repurchased around $2.5 billion worth of their own shares. Huge stock buyback program was announced, I think, a quarter or two ago. So at least when the stock is down, that's how they increase your shares value. Now, before jumping into the report, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment, get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so let's start off with a couple of comments here. Adobe achieved record revenue of $5.31 billion, driven by strong growth across Creative Cloud, Document Cloud, and Experience Cloud. Our highly differentiated approach to AI and innovative product delivery are attracting an expanding universe of customers and providing more value to existing users. Adobe delivered outstanding Q2 results, positioning us to raise our annual targets. Our market-leading products, strong execution, and world-class financial discipline position us well for the second half of 2024 and beyond. And so for this quarter, cash flow from operations were $1.94 billion. RPO exiting the quarter were $17.86 billion. And Adobe repurchased approximately 4.6 million shares during the quarter, as I mentioned just before. GAAP EPS was $3.49, that's up 24% year over year. Non-GAAP EPS $4.48, up 15% year over year. If we look at Adobe Document Cloud, revenue was $782 million, up 19% year over year. Net new digital media ARR was $487 million, which grew 12% year over year. They also say here that free monthly active users of Acrobat Web grew over 60% year over year as a result of link sharing and Microsoft Edge and Google Chrome extension. I think when people think about Adobe, they only think about Photoshop, they only think about video editing, but Adobe Document Cloud is a pretty big business for them and growing quite fast. We've talked about DocuSign for a long time. I think Adobe is definitely coming for that market. Then with regards to Adobe Creative Cloud, revenue there was $3.13 billion, up 10% year over year. They launched Express for Business that includes Firefly custom models and workflows with Photoshop, Illustrator, and Experience Cloud. If you're using Photoshop, you've probably already played around with generative AI and AI solutions also, by the way, in Adobe Acrobat, right? I think that's the thing with Adobe. People think, oh, there is generative AI models for images, for videos, etc., etc. Adobe was just going to sit around and do nothing about that. No, Adobe can implement all of that. Plus, they have the distribution. You come out with a nice feature, cool. But who are your users? 10,000 users? 100,000 users? Adobe has millions of users. So if your feature is cool, they're like, okay, cool. We'll copy it or maybe buy it and put it into a software, distribute that to the millions of users. More usage, more data, they keep on winning. Up next, Adobe Experience Cloud. So digital experience revenue was $1.33 billion, up 9% year over year. They see continued momentum with Adobe Experience Platform and native applications growing subscription revenue 60% year over year. They said today they are the #1 digital experience platform, and Adobe Experience Platform with native apps is well on its way to becoming a billion-dollar business. Again, one side of the business where people are not really paying attention to is those marketing campaigns. And especially in the age of AI, you want to work with companies that have all the credentials, that can verify all the assets in your marketing campaigns, in your videos, your images, etc., etc. They work with licensed companies, they work with plenty of other platforms as well, integrating with one another. You want to make sure that you're working with a company that does not steal data from someone else, that does not steal a voice of someone that doesn't agree to have their voice in an AI model, right? If you're using an image from Getty Images or whatnot, partnered up with Adobe, you're fine to use because they have the license. Especially if you're in marketing, it's going to be of extreme importance, especially in the age of AI, because if not, you're going to get sued each and every day. Then moving forward, next quarter, they expect revenue to come between $5.33 to $5.38 billion. Digital media net new ARR around $460 million. Earnings per share on a GAAP basis, $3.45 to $3.50. As for the full year, total revenue to come between $21.4 to $21.5 billion, with the earnings per share on a GAAP basis to come between $11.8 and $12. Oh, and by the way, with regards to GAAP EBIT for this quarter, that was 35.5%. Of course, a huge jump quarter over quarter because last quarter it got hit by that $1 billion charge for the Figma acquisition that never happened, but still that's higher than Q2 of 2023 by around 180 basis points. Oh, and RPO has grown 1.7% quarter over quarter and 17.8% year over year. So overall, what you got here, what you got is a company where maybe one quarter there was some weakness, some uncertainty definitely. Stock got hit quite a lot, but still you got an amazing business that has proven itself for years and years, keeps on innovating despite all the AI noise, keeps on being the best of the best in my opinion. You got the stock that got down quite a lot, and so you got shares of a good company at a cheaper price. That's about it. Good quarter, good guidance, continued execution here is key. Leave your thoughts down in the comment section below, like, subscribe, and I see you all in the next one. Bye-bye.